Exam Scholar, Real Estate Edition.
Question 1. If an asset is showing a decline in monetary value or a decline in the value of property, this is best known as A. Depreciation, B. Expense, C. Declining value, D. Comparable dispersion. Answer: A. Depreciation is a decline in the value of property and, in accounting, is the declining value of an asset. Question 2. In the most basic sense, debt is considered A. Any amount owed to another, B. A credit from one person to another, C. An owed amount with interest, D. Anything of value that is borrowed from another. Answer: A. An amount that is owed to another is probably the simplest form of the definition of debt. Question 3. A loan in which the lender makes payments to the builder at periodic intervals as the work progresses is best called A. A short-term interim loan, B. A construction term loan, C. A convertible construction loan, D. A periodic convertible loan. Answer: A. A short-term interim loan is a loan in which a lender makes payments to the builder at periodic intervals as the work progresses. This type of loan is also known as a construction loan, but not called a construction term loan. Question 4. Homeowners association fees are also sometimes called A. Common area assessments, B. Condominium fees, C. Common designated conveyances, D. Area commune fees. Answer: A. Homeowners association fees are also sometimes called common area assessments. They are paid by the individual owners and are used to maintain the property or common areas. Question 5. A time deposit that is held in a bank that pays a certain predetermined amount of interest to the depositor is known as A. A certified deposit, B. A certificate of deposit, C. An interest-bearing account, D. A time-stamped deposit. Answer: B. A time deposit that is held in a bank that pays a certain predetermined amount of interest to the original depositor is called a certificate of deposit. Question 6. If a homeowner refinances the mortgage on the property at a higher amount than the current loan balance for personal use, this is called A. Cash-out refinance, B. Reverse mortgage, C. Equity line of cash, D. None of these. Answer: A. A cash-out refinance is when a homeowner refinances the mortgage on the property at a higher amount than the current loan. This happens when the current borrower intends to use the money for personal use. Question 7. The final lump sum payment due at the termination of a specific type of mortgage is best called A. A hovering payment, B. A balloon payment, C. A floating payment, D. A deferred payment. Answer: B. A balloon payment is a lump sum payment that is due at the termination of a balloon mortgage. Question 8. The best definition of an appraiser is A. An individual qualified by education and experience to estimate the value of real and personal property. B. An individual that works for lenders exclusively to estimate the value of real and personal property. C. An individual that works exclusively independently as a contracted agent to estimate the value of real and personal property. D. None of these. Answer: A. An appraiser can work for lenders or they can work as independent entities. They are always qualified by education and experience to determine the value of real and personal property. Question 9. A value created according to a government formula intended to reflect the true annual cost of borrowing expressed as a percentage is called A. PR. B. ARP. C. CPR. D. ADR. Answer: A. Annual percentage rate, otherwise known as APR, is a value created according to a government formula intended to reflect the true annual cost of borrowing expressed as a percentage. Question 10. Liabilities, including long-term and short-term debt and any amounts owed to others, is best known as a person's A. Financial obligations. B. Net worth minus expenses. C. Debt. D. Assets. Answer: A. A person's liabilities that include long-term and short-term debt as well as amounts owed to others is best called their financial obligations. Question 1. If a minority person is looking to purchase a home and the lender refuses to lend to them based on their creditworthiness, this is A. Legal. B. Racial profiling. C. An example of blockbusting. D. Illegal. Answer: A. A lender is not required to lend to any person that does not meet the requirements of creditworthiness. Question 2. When a real estate developer obtains a loan for building a new housing tract and the lender gives part of the funds to the developer and agrees to release the rest of the funds as each home is built, this is called which type of financing? A. Earnest money. B. Fixed amount. C. Obligatory. D. Chronological release. Answer: C. In this type of situation, this financing is called obligatory financing or also called fixed disbursement schedule. Question 3. A reconveyance deed is used in connection with A. A life estate sale. B. A trust deed sale. C. A valid transfer of ownership in any property. D. None of these. Answer: B. A reconveyance deed is used in connection with a trust deed sale by a trustee to a trustor after a loan has been paid in full. Question 4. In order to form a valid contract, which is not necessary? A. Performance. B. Consideration. C. Offer. D. Acceptance. Answer: A. Even though an offer has been placed, the offer accepted, and consideration put forth, there is no guarantee that either party will perform the obligations of the contract. Performance is not a necessary part of forming a contract. Question 5. In regards to contracts, if part of a contract is written and another part is printed, which part takes preference? A. The typed part. B. The written part. C. None. Contracts must be typed. D. They are both equal. Answer: B. If part of a contract is written and another part is typed, the written part takes preference over printed parts. Question 6. If a contract is written and parts are incomplete or ambiguous, what type of agreement takes preference? A. An oral agreement. B. A new typed agreement. C. A new written agreement. D. None of these. Answer: in this case, if a contract is written or typed but is ambiguous or incomplete, an oral agreement then takes preference. This is true only if the original contract is ambiguous or incomplete. Question 7. If a person wishes to obtain a chattel mortgage, they would need to put up A. Personal property as collateral. B. Another property as collateral. C. Any type of property as collateral. D. None of these. Answer. A. A chattel mortgage is a mortgage that is secured by personal property. Question 8. A real estate broker is typically considered A. An agent or fiduciary of the principal. B. An attorney in fact. C. To have the power of attorney. D. None of these. Answer. A. A real estate broker is typically considered an agent or fiduciary of the principal. A broker does not have power of attorney unless the principal grants him/her that right. Question 9. If a broker notifies a seller, of whom the broker is working with by means of listing, of a prospective buyer, this creates what to entitle the broker to a commission. A. Procuring cause. B. Prior notice. C. Fiduciary relationship. D. Accelerated notice. Answer. A. If a broker notifies a seller of the identity of a prospective buyer of a listed property of a client the broker is working with, this constitutes procuring cause. If the seller were to then go to the prospective buyer later without the broker's knowledge and make a deal, the broker would still get the commission due because the broker was the procurement source of the buyer. Question 10. The bulk sales law is included in A. The habendum clause. B. The caveat emptor clause. C. The Uniform Commercial Code. D. The governing laws of commerce. Answer. C. The Uniform Commercial Code includes the bulk sales law. Bulk sales laws are intended to prevent business owners from defrauding or evading creditors by transferring all, or a substantial portion, of the assets of the business to another individual or entity. The law is also intended to avert the possibility of businesses selling their assets below fair market value in a sweetheart sale, in which the owner of the business manages to maintain a degree of control. Question 1. If a person has no cash on hand but offers a personal note payable in 60 days as a deposit on real property, this would be A. An unacceptable form of payment. B. Acceptable if the seller is informed beforehand by the agent. C. Void. D. Both A and C. Answer. B. The personal note is an acceptable form as a deposit, but the seller must be advised of this before the agent can accept it. Question 2. A mortgage company that originates loans that are then placed with lending institutions of whom the company has a pre-existing relationship is best known as A. Corrupt. B. A mortgage broker. C. An intermediary. D. A distributor. Answer. B. The best definition of a mortgage broker is a mortgage company that originates loans that are then placed with lending institutions. Most commonly, the lending institutions and the mortgage company have a pre-existing relationship. Question 3. The difference between the interest rate and the index on an adjustable rate mortgage is best known as A. Margin. B. Differential. C. Substitution rate. D. None of these. Answer. A. A margin is the difference between the index and the interest rate on an adjustable rate mortgage which remains stable over the life of the loan. Question 4. If an individual is representing a firm that makes loans on real property, they would be known as A. A lender. B. A broker. C. An intermediary. D. An attorney in practice. Answer. A. An individual can represent an institution that makes loans on real property, and both the individual and the institution can be called a lender. Question 5. A firm that makes loans on real property based on an individual's creditworthiness is known as A. A creditor. B. A lender. C. A loaner. D. A lendee. Answer B. In real estate, the firm or institution that makes loans on real property is called a lender. The lender makes loans based on the individual's creditworthiness. Question 6. A lease is best known as A. A written agreement between the property owner and tenant outlining the conditions under which the tenant may possess the property. B. A written document between the property owner and tenant describing the length of time the tenant may occupy the property. C. An oral agreement between the property owner and tenant agreeing to allow the tenant to occupy the property for more than 1 year. D. None of these. Answer A. In this case, the best answer for a lease is a written agreement between property owner and tenant outlining the conditions under which the tenant may possess the property. This would include length of time as well as payment due dates. Question 7. A unique mortgage that allows for the lender to make payments to the homeowner, allowing owners to convert equity into cash, that does not need to be repaid until the borrower vacates the property is best known as A. A reverse accrual mortgage. B. A reverse annuity mortgage. C. A reverse home equity conversion. D. An annuity payment conversion. Answer B. A reverse annuity mortgage is also known as a home equity conversion mortgage, HECM. This type of mortgage allows for the homeowner to collect payments from the lender, converting the home equity into cash. This type of mortgage does not need to be repaid until the borrower no longer occupies the property. Question 8. If Jerry was asking to receive a loan in which the interest rate does not change during the term, he would be asking for this type of mortgage. A. A non-adjustable mortgage. B. A fixed-rate mortgage. C. A conventional fixed-rate mortgage. D. Any of these. Answer B. A fixed-rate mortgage is a mortgage loan in which the interest rate does not change during the loan term. Question 9. If an occupant is legally expelled from real property, this is known as A. An ejection. B. An eviction. C. An evocation. D. An expulsion. Answer B. An eviction is the lawful expulsion of an occupant from real property. This can be accomplished by the property owner through the court processes. Question 10. Real estate taxes, hazard insurance, and mortgage insurance are typically paid by A. Escrow disbursement. B. Personal property taxes. C. Real property taxes. D. None of these. Answer A. Real estate taxes, hazard insurance, and mortgage insurance are typically paid by escrow disbursements. Question 1. This usually refers to the loan officer's written opinion of the ability of a borrower to qualify for a home loan, after the loan officer has made inquiries about debt, income, and savings. A. Qualification. B. Pre-qualification. C. Inquiries. D. Acceptance. Answer A. Pre-qualification usually refers to the written opinion of the lender on the borrower's ability to qualify for a mortgage after looking at the borrower's debt, income, and savings. Question 2. What does the term ARM mean? A. Adjustable rate mortgage. B. Adjustable return mortgage. C. Addendum requirement management. D. Adjustable rate market. Answer. A. ARM is the abbreviation for adjustable rate mortgage. Question 3. What provides separate housing units for more than one family, although they secure only a single mortgage? A. Multi-dwelling units. B. Condominiums. C. Multi-family housing projects. D. Multi-occupant apartments. Answer. A. Multi-dwelling units are housing units that provide housing to more than one family but are secured by only a single mortgage. Question 4. This is paid by a mortgager for mortgage insurance, either to a government agency such as the Federal Housing Administration or to a private mortgage insurance company. A. Mortgage insurance premium. B. FHA insurance premium. C. VA insurance premium. D. Lender insurance premium. Answer. A. The mortgage insurance premium is paid by a mortgager for mortgage insurance. Question 5. This person solicits loans, represents the lending institution, and represents the borrower to the lending institution. A. Loan officer. B. Equity manager. C. Account officer. D. Loan manager. Answer. A loan officer is the person that solicits loans and represents the lending institution and then the borrower. Question 6. This is a way of holding title to a property when the mortgagor does not actually own the property but rather has a recorded long-term lease on it. A. Leasehold estate. B. Life estate. C. Lease in full. D. Writ of judgment. Answer. A. A leasehold estate is a way to hold title to a property without actually owning the property. Question 7. This is a decision made by a court of law. A. Judgment. B. Abstraction. C. Ruling. D. None of these. Answer. A. For this question in relation to real estate, a judgment is a decision made by a court of law. Question 8. This entity manages the common areas of a condominium project or planned unit development and owns title to the common elements in a planned unit development but doesn't in a condo development. A. Homeowners Association. B. Homeowners Corporation. C. Cooperative Corporation. D. Condominium Charter. Answer. A. The Homeowners Association manages the common areas of a condominium project or planned unit development. It also owns title to the common elements in a planned unit development but doesn't in a condo development. Question 9. This is an unconditional unlimited estate of inheritance that represents the greatest estate and most extensive interest in land that can be enjoyed and is of perpetual duration. A. A fee simple estate. B. A life estate. C. A leasehold. D. A freehold estate. Answer. A. A fee simple estate is an unconditional unlimited estate of inheritance that represents the greatest estate and most extensive interest in land that can be enjoyed and is of perpetual duration. Question 10. This is a consumer protection law that regulates the disclosure of consumer credit reports by consumer/credit reporting agencies and establishes procedures for correcting mistakes on one's credit record. A. Fair Credit Reporting Act. B. Uniform Commercial Code. C. Fair Isaac Corporation Act. D. None of these. Answer. A. The Fair Credit Reporting Act is a law intended to protect the consumer by regulating the disclosure of consumer credit reports and establishes procedures for correcting mistakes on a credit report. Question 1. Mutual mortgage insurance would be included in the issuance of A. A conventional loan, B. A CalVet loan, C. An FHA loan assumption, D. A VA-backed loan? Answer: C. FHA insures loans with mutual mortgage insurance. It is used by FHA to pay lenders any loss, within the insurance limits resulting from foreclosure. Question 2. Of the following factors, which is the one that would not contribute to obsolescence? A. Wear and tear from use. B. Out-of-date equipment. C. Change of locational demand. D. Misplacement of improvement. Answer: A. Wear and tear from use in physical deterioration. Out-of-date equipment is functional obsolescence. Change of locational demand and misplacement of improvement are both economic obsolescence. Question 3. Which of the following items would not be included in a bill of sale transferring a retail merchandising business? A. Inventory of stock. B. Assignment of leasehold. C. The trade name. D. List of fixtures and equipment. Answer: B. A bill of sale should include an inventory of the stock, the trade name, and a list of the fixtures and equipment. It would not include an assignment of the leasehold because that is personal property that should be transferred separately. Question 4. If an advertisement is placed in a newspaper advertising a home for sale and only the annual percentage rate is stated: A. The amount of the down payment must be included. B. The number of payments must be included. C. Additional disclosures are not required. D. The amount for the payment must be included. Answer: C. Stating the ARP is sufficient disclosure for the ad. The disclosure statement issued at or before closing would include a breakdown of the costs of credit, but not the ad. Question 5. What document is issued when a judgment for sale of the property is made by the court? A. Writ of execution. B. Attachment. C. Abstract of judgment. D. Sheriff's deed. Answer: A. A judgment by the court ordering the sale of property is known as writ of execution. An attachment holds property for court judgment. An abstract of judgment is a written decision of the court, when recorded creates a lien. A sheriff's deed is issued to the holder of a certificate of sale after the 1-year redemption period has passed under the terms of the mortgage foreclosure proceeding. Question 6. In the sale of a business opportunity, which of the following would contribute the least to goodwill? A. Advertising over a period of time. B. Continued public patronage of the establishment. C. Pleasant associations in the customer's minds because of past associations. D. Adequate stock and modern fixtures. Answer: D. Goodwill is defined as the expectation of continued public patronage. Of the choice offered, adequate stock and modern fixture would contribute the least to that expectation. Question 7. A licensee who has several years of experience in the industry decided to retire from actively marketing properties. Now she helps clients choose among the various alternatives involved in purchasing, using, or investing in property. What is her profession? A. Real estate counselor. B. Real estate appraiser. C. Real estate educator. D. Realtor. Answer: A. Advising and guiding investors and other buyers as counseling them. Many states require a person to have a real estate license to serve as a real estate advisor/counselor for a fee, since it involves skills and duties closely related to real estate brokerage. Question 8. An advertisement for the sale of real property placed by a real estate broker is prima facie evidence of fraudulent and misleading information when A. A misleading map is included in a newspaper advertisement offering a 20-year-old single-family residence for sale. B. The selling price and financing terms are not as stated. C. The interest rate on the note differs from its advertised yield. D. The name of the development is misspelled. Answer. C. Prima facie means on its face without further evidence. Real estate law specifically states that no place an advertisement concerning a note with an effective yield that does not also state the rate on the face of the note as prima facie evidence of fraud. Question 9. In an escrow, prepaid rents are normally A. Debited to the vendor, B. Credited to the vendor, C. Debited to the buyer, D. Credited to the buyer. Answer. D. The vendee is the buyer. The buyer normally receives the prepaid rents. Question 10. The words broker and realtor are A. Interchangeable, B. Different categories of membership in NAR, C. Different titles offered by separate professional organizations, D. Unrelated. A broker is a real estate licensee and a realtor is a member of NAR. Answer. D. Brokers are licensed by their state, realtors are voluntary members of the NAR, a trade association.
Exam Scholar, Real Estate Edition.